Hey, economic warriors. It's your boy, the boss of economics world, here to rip apart the latest clown show in Washington and Wall Street. Buckle up, because today we're diving headfirst into the steaming pile of economic mismanagement that is Donald Trump's second term, Jerome Powell's tightrope walk, and the Federal Reserve's slow-motion car crash. Spoiler alert, the government's fingerprints are all over this recession risk, and I'm here to call it like I see it, with data, sass, and a whole lot of truth bombs. Oh, folks, where do we even start? Donald Trump is back in the White House, and he's swinging harder than ever at the Federal Reserve's sacred independence. You know, that pesky little thing called monetary policy autonomy that's supposed to keep politicians' grubby hands off the levers of inflation and interest rates. Yeah, Trump's treating it like a piñata at a kid's birthday party. And Jerome Powell? Poor guy's out here trying to dodge the punches while balancing on a unicycle and juggling flaming torches. Let's break this down, point by point, from the surface-level chaos to the deep, dark economic abyss it's dragging us into. Because, folks, this isn't just a political soap opera, it's a masterclass in how to tank an economy, courtesy of government overreach and mismanagement. First off, let's talk about Trump's obsession with bullying the Fed into submission. On April 22, 2025, Trump went on record saying he has no intention of firing Jerome Powell. Sounds sweet, right? Except this comes days after his National Economic Council director, Kevin Hassett, hinted they're studying whether Powell can be legally canned. Oh, and let's not forget Trump's social media tantrum last week, screaming, Powell's termination cannot come fast enough. A move that sent global markets into a tailspin. Now, I get it, Trump wants lower interest rates. He's been whining about it since his first term, claiming high rates are killing his beautiful economy. But here's the thing, folks, interest rates aren't a video game cheat code you can spam to make the stock market go brrr. The Fed's job is to keep inflation in check, not to be Trump's personal ATM. And right now, inflation's been above the Fed's 2% target for 4 years straight. According to the Bureau of Labor Statistics, the Consumer Price Index, CPI, in March 2025 clocked in at 3.8% year-over-year, down from its 2022 peak of 9.1%, but still nowhere near the Fed's comfort zone. So, what does Trump do? Instead of letting Powell and company do their jobs, he's pressuring them to slash rates at the worst possible time. And it's not just talk, he's weaponizing executive orders and stacking the Fed's board with loyalists like Michelle Bowman, his nominee for vice chair of supervision, who's already signaling she'll play ball with the administration. This, my friends, is how you erode central bank independence, and it's a one-way ticket to economic disaster. Now, let's give Jerome Powell a little credit here, the man's in an impossible spot. On one hand, he's got Trump breathing down his neck, demanding rate cuts while markets are still reeling from his tariff threats, more on that later. On the other hand, Powell knows cutting rates prematurely could reignite inflation, especially with supply chain disruptions and energy prices spiking again. The Fed's March 2025 meeting minutes show they're wary of easing too soon, and for good reason. The last thing we need is a repeat of the 1970s stagflation nightmare, when political pressure on the Fed led to double-digit inflation and unemployment. But here's where Powell's dropping the ball, folks. Instead of standing firm across the board, he's caving in areas outside monetary policy to appease the administration. The Fed's already backed out of a global coalition on climate issues, you know, that whole greening the financial system thing that was supposed to address systemic risks from climate change. And after Trump's January 2025 executive order banning DEI programs, the Fed quietly scrubbed its website of diversity and inclusion pages. I mean, come on, Jerome. If you're gonna fight for independence, fight for it everywhere, not just on interest rates. This selective surrender only emboldens Trump to keep chipping away at the Fed's autonomy. Alright, let's zoom out and talk about the real economic issues here, because this Fed drama is just the tip of the iceberg. Trump's policies are lighting fires all over the economy, and the government's mismanagement is pouring gasoline on the flames. Let's break it down. Trump's back on his tariff kick, threatening to slap massive duties on imports from China, Mexico, and the EU. He claims it'll bring jobs back to America, but let's look at the data, shall we? According to a 2024 study by the Peterson Institute for International Economics, Trump's first-term tariffs cost American consumers $40 billion annually in higher prices and killed 142,000 jobs due to retaliatory tariffs from trading partners. Fast forward to 2025, and Goldman Sachs estimates that his new tariff proposals could shave 1.5% off U.S. GDP by 2026 while jacking up inflation by 0.8 percentage points. And guess what? Markets are already freaking out. The S&P 500 dropped 3.2% in the week following Trump's latest tariff announcement, and the VIX, Wall Street's fear gauge, spiked to its highest level since the 2020 COVID crash. This is what happens when you let a politician play trade war roulette with the global economy. But hey, at least Trump's got his beautiful stock market, right? Wrong, the Dow's down 7% year-to-date as of April 2025, and investors are fleeing to safe havens like gold, which hit an all-time high of $2,800 per ounce last month. Now, let's talk about the Fed's other role, bank supervision. Trump's not just meddling with monetary policy, he's gutting the Fed's independence on financial regulation, too. His January 2025 executive order swept up bank rules into White House review, effectively giving his administration veto power over the Fed's supervisory decisions. And with loyalists like Michelle Bowman in key roles, the Fed's already signaling it'll cooperate with Trump's deregulatory agenda. Why does this matter? Because lax bank supervision is how we got the 2008 financial crisis, folks. Remember Lehman Brothers? Remember toxic mortgage-backed securities? Well, guess what, the seeds are being sown for another disaster. The Office of the Comptroller of the Currency, OCC, reported in March 2025 that non-performing loans in the U.S. banking system have risen 22% year-over-year, driven by commercial real estate defaults and consumer debt distress. And yet, Trump's pushing to roll back stress tests and capital requirements, all in the name of cutting red tape. This is government mismanagement on steroids, and it's putting the entire financial system at risk. And then there's inflation, the elephant in the room that Trump conveniently ignores. As I mentioned, CPI is stuck at 3.8%, and core inflation, excluding food and energy, is even stickier at 4.1%. Why? Because of supply-side shocks that Trump's policies are making worse. His tariffs are driving up input costs for manufacturers, while his immigration crackdown is shrinking the labor pool, pushing up wages in a tight market. The National Federation of Independent Business, NFIB, reported in April 2025 that 38% of small businesses are struggling to fill job openings, the highest level since the pandemic. Meanwhile, energy prices are spiking again, with WTI crude oil hitting $92 per barrel in April 2025, up 15% since Trump's inauguration. Why? Because his drill, baby, drill rhetoric hasn't translated into actual production increases, and his saber-rattling with OPEC Plus has spooked global markets. Higher energy costs feed into everything, from transportation to manufacturing to your grocery bill. And guess who gets blamed when prices keep rising? Not Trump, he'll just point the finger at Powell and the Fed. Alright, folks, let's connect the dots. Trump's tariff tantrums, his assault on Fed independence, and his deregulatory zeal are a perfect recipe for a serious economic recession. Don't take my word for it, look at the data. The Conference Board's leading economic index, LEI, has been declining for 6 straight months, signaling a 70% probability of a recession by Q4 2025. Consumer confidence, per the University of Michigan's index, cratered to 62.3 in April 2025, its lowest level since the 2020 lockdown. And the yield curve, that trusty recession predictor, inverted again in March 2025, with the 10-year Treasury yield falling below the 2-year yield by 35 basis points. But here's the kicker, this isn't just a cyclical downturn. This is a policy-induced disaster, brought to you by government mismanagement. Trump's meddling with the Fed undermines its ability to stabilize the economy, while his tariffs and deregulation are stoking inflation and financial instability. And Powell? He's too busy playing defense to focus on the real threats. This, my friends, is how you take a $26 trillion economy and drive it into the ground. So, what's the takeaway, economic warriors? It's simple, when politicians treat the central bank like their personal piggy bank, bad things happen. When they prioritize short-term political wins over long-term economic stability, bad things happen. And when they let ideology trump data, bad things really happen. Trump's second term is shaping up to be a masterclass in economic mismanagement, and the Fed's independence is the first casualty. But it won't be the last, mark my words, folks, we're on the fast track to a recession, and the government's got its foot on the gas. To my finance pros out there, keep a close eye on those risk indicators, non-performing loans, yield spreads, and market volatility are screaming red flags. And to my everyday viewers, tighten your belts, because higher prices and lower growth are coming your way, courtesy of Washington's Clown Show. Until next time, this is your boy, the boss of economics world, reminding you to stay sharp, stay skeptical, and always follow the data, not the drama. Peace out. And hey, if you liked this video, smash that like button, hit subscribe, and ring the bell, because we're just getting started exposing the economic insanity.